Hello, trading is closed on October 13th, 2020. Let's do our disclaimer, go over our calls, see if we can forecast what Wednesday has in store. This is my plan for trading on Wednesday, the 14th of October. Can't guarantee it's the right plan. Please trade at your own risk. Please follow my rules. If you want to contact me, here's my email address. We look for the pattern with the early low. This is it, and tomorrow has the early high. Now, we said a few things. We said to confirm yesterday's break, we had to trade 1 cent over the close. That didn't happen. And until that happens, it still could be a false break. We need to trade over that close. And right now, actually, we need to trade over yesterday's high, not the close. We said unless we gapped and overtook the high early, we could see lower prices, and that's what happened. Norm Winsky was on earlier today. He thinks we might have a gap down followed by a recovery. I certainly can't say it's impossible. I actually came up with a different interpretation, but frankly, it's not a very clear pattern for me, and you should bear that in mind. There is a pattern of somebody else. I think it's Larry Williams, who says if you have a strong move up and then an inside a day, the next day tends to be up. I've never really tested it, but don't forget, tomorrow's open can substitute for today's close. So if we gap down tomorrow, which I'm not predicting, then that's off the table. You were dropping all day here, close over these lows. Well, that's actually positive, but if we take these lows out early, all that positivity goes away. As we'll see in a minute, this high came at a very significant point. And so if you're a bull, it's disappointing we couldn't confirm this break. Now trading over this close won't be enough to trade over that high. Well, during the day, MEJT said this drop was false. Prices would retrace. That's what's happened. These yellow lines define a resistance area which is held so far. Now we have this break on the weekly chart above this trend line, but we don't have confirmation. And of course, this being a weekly chart, the week isn't over. If it doesn't hold, that doesn't count. The real question is what's going on with this wave. Now, as I've said, we had a failure of the 2B top, so we should go over this high. But it doesn't mean you have to go there in a straight line, and it doesn't mean you can't drop first. So let's look at this leg up. This leg up is a Fibonacci target of quite a few patterns. About a week ago, you had this drop. I thought it was pretty negative. I said all you had to do is to get follow through and you'd be dropping. Instead, we had a rally. It's a Fibonacci target, 261.8% of this move. And often that's all you get. In addition, if this is wave A and that's wave B, you can see that in wave B, waves A and C are exactly equal. So it's one logical place for this to stop. Now we are retesting the all-time high in September. Let's take a look at that high. Here's a Fibonacci grid from this day's close to this day's high. We have stopped today's Yesterday's high was pretty much a 38.2% retracement of this move, and it failed to take out this high. So even though this is a hole in the wall gap and it should fill at some point, sometimes filling just a Fibonacci retracement of it means you're not ready to take it out all the way yet. You can see how that defined yesterday's high. So we have a number of different Fibonacci patterns all coming together at yesterday's high. Now, it doesn't mean the high has to hold, but until you take out some of these lows, it could still rally. But if we start dropping and start taking out these lows, at least that's one of the places which makes sense for this leg to end, even though I don't think this is going to hold forever. Could have an A, a B, there could be a wave C down from here, and then you could go up. I think a lot's going to depend on the early trade. Now, tomorrow's pattern is the early high. Typically, it's a rally day with a final hour high. Just be aware that failure is a straight line drop, and the rejection of this move up makes failure a distinct possibility. We didn't trade past yesterday's close, so the breakout over the trend line wasn't confirmed. We don't know it'll fail, but it's still possible for it to fail. Volatility indices have all given Bollinger Band sell signals by reversing from under their lower Bollinger Bands. Be aware the upper bands are not that far away, so if we drop, go over the upper band and then reverse, then we'll get a buy signal. And I interpret this to mean if there is a decline, it doesn't have to be a long decline. It doesn't preclude a steep decline. I just don't think it'll be long, if that even happens. We had a day-long drop but couldn't close under the lows. It's positive unless we gap and promptly undercut today's low. Yesterday's high came at a point of strong fib resistance, so you can't rule out gapping down. Yesterday's high is a candidate for a short-term peak. I still feel all-time highs are coming fairly soon, but that doesn't preclude seeing lower prices first. Rallying past yesterday's high, and the sooner we do that, the more bullish it is, should be a prelude to further advances over the short term. It's really a question of who wins, this high or this low. If we start moving up tomorrow, take this out, then I don't think all these fibs mean much. But if we drop here, it could be a steep drop. And after a steep drop, if that happens, which I think will be of short duration, at that point I think we're poised to take out this high and probably have a good chance of rallying to the end of the year. So we have a candidate high, not assured. If we drop, there should be a good buying opportunity. I would guess, and that's a guess, before the month's up, we'll start up again. Early high tomorrow, a rally day or a straight line drop. I think we'll know early on which it is, and that's today's call.